Ah, you want to hear me? Why do you want to hear me? Okay. Sorry about that. Okay, can you hear me now? Can you hear me now? Can you hear me now? Okay. I even got the mic now. Do you hear me now? Yeah, I think it's working. All right, whatever. Okay. All right, welcome everybody to the Sunday night chart chat. It looks like the moon market is back. The moon market is back. Yeah, sorry about the little audio problem earlier. Look, I know I've cried wolf a couple of times. I was a little bit early in saying, hey, stocks have bottomed out probably 3 or 4 times. If you've been watching for the last few months, I was expecting the market to have bottomed out sometime in March. I thought maybe it was a little bit later, probably about 4 or 5 times. But also, if you are subscribed to our Telegram channel, because look, a lot of times what happens is I might say on a live stream, hey, the market, it's bottomed out, breaking above the moving average. And then 2 days later, on our Telegram, I say, hey, the trend has reversed, which has happened a whole bunch of times. That's why you want to subscribe to the Telegram channel, because look, these trends can reverse very quickly. But look, I think I cried wolf a few times early when it came to the bottom of the market, but also I was a little bit early when calling the top of the market. If you remember, late November, if you look, it's on the videos are out there. If you look at the videos back in, the chart videos in late November 2020, even into December, I was saying, hey, I was expecting the market to peak after January of 2021. It happened about a month later, and then we were in a crazy parabolic upwave, and here we are today. So here's what's interesting. I think we've actually bottomed out right now. Things are looking like we have bottomed out in the disruptive innovation space, right? So these are the stocks that peaked in February of 21. So that's all the Cathie Woods stocks, a lot of our penny stocks, all that stuff peaked Valentine's Day 2021. And the market is a leading indicator. The market is forward looking. The market's forward looking by 6 months, sometimes 12 months. A lot of people think it's only 6 months, but sometimes it could be 12 months, right? Because think about it. The Cathie Woods stocks, when did they peak? They peaked February of 21. That would be 12 months before people all of a sudden started talking about, recession, inflation. When did all the recession talk really start? It started, I would say, in earnest in February. Before that, we had people saying, yeah, whatever. But February was when really the recession talk started, and now you're hearing it like every day: recession, inflation, but the time was really a couple months earlier, and really probably November was really when things started to kind of peak out over there. But so the point is this means that the disruptive innovation stocks, the Cathie Wood stocks, some of our penny stocks, basically, if they peaked in February of 21, they've bottomed out, or they're bottoming, they've bottomed out. So, and we're seeing that right now in the stocks. But at the same time, we have a couple of stocks right now, which I'm going to be talking about, which are on the screen. Those are the bellwether stocks, which I think are going to lead us out into a new bull market. But the overall market, I'm not convinced by the broader indexes. Like, there's a lot of stocks that could still be going down. The Nasdaq, where it looks like we're trying to break above the 50-day moving average. I don't buy it. I'm not a believer. I'm not a believer in the broader indexes. I think a lot of these things could still go down. I think Nasdaq, the overall, look, it's kind of hard because some of these stocks are heavily in it. But, if it dropped to 7,500, if, we had another 30-50% on S&P, I wouldn't be shocked. But look, the charts don't lie. So let's look at, what's going on right here. Let's take a look at, let's first bring up the poster boy of the pandemic disruptive innovation boom, Zoom, right? Take a look at this. I hate this company, by the way. I mean, I don't even know how to use their. I can't use their product for whatever reason. The Zoom on my, and I'm using a Mac. It doesn't work for whatever. I'm like the only guy. It does. Maybe I'm the only person. It just doesn't work for me. I think the whole thing sucks. I prefer Google Meet or Microsoft Window, whatever it is, the window, whatever they're called, Meets, whatever it is, WhatsApp. I mean, this Zoom thing is garbage. But the stock, I mean, the stock looks like it's bottomed out. I mean, here's what's going on. Look at this. And again, this is very bullish for a lot of our disruptive innovators. We got, looks like a head and shoulders bottom right over here in May 26th. We're above the 50-day moving average. We broke out above the 50 on May 27th, so over a month ago. And, now look at this. It's used that 50 moving average as kind of like as a pivot, like as a trampoline. You see like a little double bottom. I'm going to zoom in for you. You see this, like a little double bottom off that 50. I mean, it's pretty cool. I think this is very bullish. I mean, I think it's very, very bullish. We could, very possible, very possible. I think the Zoom thing is very bullish. I don't know if I would buy it because I just hate the company. I'm biased. It's just I don't believe in the product. And there's other charts looking similar, so I'd rather go with something which has more torque. NexTech, for example, NEXCF. I'm going to go into that later. By the way, the microcaps, the reason why you want to look at some of the penny stocks, I'm going to be talking about it just a little bit, is they have much higher torque to this. So yeah, sure, the Zoom can go up, 3x. Zoom could go back to 500 or higher. I would not be shocked. But that means some of these penny stocks can go double that because they're much higher gearing. Let's take a look at again in Zoom. Again, I hate this company, but you can't argue with the chart. I mean, you're looking at a double bottom. This is basically, I mean, this is kind of like a kind of classic double bottom here because look at this 2019 low, which was around $65, right? And we're making a higher low, which is what you really want to see. You want to see higher lows, really. So, I mean, this thing looks like it wants to go higher. Look, we've been in a stealth bull market. By the way, just so you know, bull markets start when everybody's sleeping, when nobody expects, when there's capitulation, when we've run out of sellers. The market is completely capitulated. I believe it has anyway. And, it looks like it's a bottom. And again, it's the summer. We're in the middle of summer. And that's when, nobody's around. That's when bull markets start, when nobody's watching. The market basically, the market wants to hurt as many people as possible on the way. Bear market, the idea is to destroy everybody and to get as many people sucked in and wipe everybody out. And when it takes off, it kind of does it secretly, right? It's like a secret bull market. All right, AMC. Okay, we'll pull up AMC. But yeah, so I think we're in a stealth bull market. So you got Zoom that's moving up. That's very bullish. Let's take a look at Roblox, which is relevant to the metaverse Web3 theme like NextTech. But this is amazing. Now look at the way this is bounced on Friday. Much higher conviction. I mean, the Zoom thing looks very nice. You see, the trades are, they're above the moving average, but just a little bit. This thing is completely clear of the moving average, and it kind of broke out of a little pennant formation over here. So Roblox, and again, I don't know what these guys do. I don't get the whole thing. Like, I couldn't care less. This thing wants to go higher. It broke out of the moving average June 24th. June 23rd, so about a month after Zoom. So Zoom has been the bellwether. Look at I mean, this is the way it works, right? So Zoom bottomed out in May, and Zoom was one of the big high flyers, right? So that was the first to peak. Now it's the first to come out. To me, this says that we're probably going to be in a recession. Officially, you know, we're going to come out of the recession by, let's call it, you know, I don't know. It could be you know, who knows what's going to happen. I don't want to, you know, I can't I'm not an economist. I'm not a prognosticator. I don't have a crystal ball, but very possible we could go into a pretty deep recession and we could come out of it maybe in, could be 12 months from now. So maybe by June of next year, by May next year. That's why. So these things are 12 months ahead, right? So the disruptive innovators are telling you that, you know, the market's going to be bottoming out. One trick pony. Yeah, that's what I think. I mean, I don't get the Zoom thing. I don't get the whole Zoom thing. I mean, it's like I don't get it. But you know, the charts don't lie. I mean, this is why I don't like the stock. I wouldn't buy it because it's just too. You know, it's just you know, there's just better things out there, right? I mean, better charts, right? So anyway, Roblox. Why am I showing this chart? Because take a look at this. Does this chart look familiar? Does this look similar? Look at this, NextTech. I mean, amazing, right? Look at this. Look at this, the breakout, June 21st, above that moving average, pivoting and a high, very strong Friday, very strong, high conviction buying on Friday. High conviction buying, right? Roblox. It's the same chart. Now, okay, let's say you like the metaverse play. Let's say you like Web3. Let's say you're ready for the AR glasses, which are going to be coming out. Now they're saying it's in Q1 of next year. So we're getting close. You know, we were expecting it last year, but now, okay. So you could either buy Roblox for 41 bucks a share, right? And, you know, it could go to 120. You could triple, right? Sure, not a problem. Okay, could happen. Or you could have a better setup, I believe. Again, I don't want to give any advice. This is not advice. You know, the Canadian regulations in Canada prevent me from saying how I feel about these stocks. I can't give you, what do they call it? What's the word? Price, not target. Anyway, I can't say, hey, it's going to X, right? I'm not saying that stuff. All these things can go to zero. I'm not saying any of these things. But look at that. Look at the gearing. This thing, I believe, NextTech has a much better probability in terms of from the chart setup to do a triple than Roblox. I mean, I think it also has a much bigger history, right? It's much bigger. So 1 year, the chart is a big, wide double bottom. I mean, it's got everything going for it. By the way, I'm not saying NextTech is going to triple. I'm just saying that the chart setup points to you have next level of resistance. I'll give you some of the resistance levels. I'm not saying the stock is going to go there. I'm not saying anything. All I'm saying is this. It looks like we've bounced off the bottom. And I told you guys, I don't know, last month. If you look at Telegram, you look on the thing, I said, hey, this is it. The bottom is in. It looks like the bottom is here. And then we officially broke out on June 20th. That was really the indicator because, you know, as soon as the stock breaks above 50-day moving average, you want to be long. When it's below it, you want to be short or out of it. Anyhow, next level of resistance in NextTech is around the $2 area. We see, you know, that this is kind of where you see some resistance. So this thing could very easily, very quickly move to $2. It could, right? I'm not saying it's going to. None of that stuff. I'm just saying that the path of least resistance is right now based on the momentum, based on the breaking above the moving average. The path of least resistance is towards $2. Not saying it's going to go there. Could go to zero. Who knows? If it manages to break at above $2, you got a little bit of resistance at $3, but then I think you kind of have a vacuum to like $5-6, till $5 or $6. So we could be in for. I mean, next could shock the world. I mean, I think the stock could shock the world when it starts moving. Well, we've seen the moves. I mean, I was in the stock 2 years. I mean, oh my God, I think it's almost a 3-year anniversary since I first introduced NextTech. I don't know. Look, by the way, I'm showing you the Canadian chart. Next NEXCF is the one you really want to watch, but I'm using that. I'm just showing you the Canadian chart because it's here. So look, we introduced NextTech. I think it was August, July. I think it was late July of 2019, if I'm not mistaken. So it was about 50 cents. Yeah, it was about 50 cents, 60 cents Canadian, 35 cents US. Is that right? That's crazy. Yeah, I think it was 60. Wow. You know what? I kept saying NextTech was a 10x. Is actually, I think this is like a 20 bagger. I think it was a 20 bagger. I might have been underestimating the performance. I think this thing was a 20x. I keep getting confused because I'm dealing with the US thing so much. I get them all mixed in together. But anyway, look, the stock basically went from 50 cents when we introduced it to $10. This is Canadian. It was 60 cents. I don't know. Could have been 50, could have been 60. Doesn't matter, right? If it went to $10, it's almost a 20 bagger. So and it was very quick. Here's what's interesting also. By the way, I got to tell you guys, I'm going to give you a sneak preview. This is only a few people watching. I'm actually about to publish. I've been talking about 10 baggers, 100 baggers, and I've done a couple of live streams where I talk about the system. Do I make this stuff up? Am I just full of shit? Am I just like a stock pumper? Saying everything is going to go to the moon, 100 bagger rockets. Because that's what people are saying. A lot of people saying that on the internet and social media, saying, "Oh, this guy's just a pumper, he's a scammer." All he says is moon, rocket, whatever it is. No, there's actually a system in place. There's a methodology to how I pick these stocks. When is the time to get in? When is the time to get out? There's pretty detailed. I've done a couple of little webinars, and you know what? I actually figured, let me put this all to writing so people can actually read it and understand it and absorb it. So that way I don't have to repeat stuff because it seems like, I talk and I'm not really that good at speaking. If you notice, I don't finish sentences or whatever. I'm a much better writer. So I have a book that's going to be coming out on 100 baggers, how to find stocks that can increase 10x to 100x, penny stocks with 10 bagger, 100 bagger potential. The book is going to be coming out next probably few months, probably after September. I'm just finishing up right now. Actually will be good is if you guys have any question, I'm curious, what are your biggest questions when it comes to penny stocks? In terms of how do you find 10 baggers? Whatever your question is, if you ask a question, maybe we can come up with an answer. But yeah, the book, it's going to be fast to read. I keep it very, right to the point. Why am I mentioning the book? I'm not here to sell to you right now. Although I will be selling it to you, just so you know, it will be marketed. But the point of it is that, look, there's a methodology to this stuff. I don't just pull these things out of my ass, right? So when I'm talking about this stock, being a potentially 10 bagger, 100 bagger, it's based on, a detailed philosophy based on, market analysis, based on, 10 different factors. I have 10 different factors, which I go through my book exactly step by step, how you can look at each one, what you need to look for. By the way, big clue, what's the number one thing that I'm looking for is, and this is subjective, CEO quality. CEO quality, number one thing. Why is it so important for microcaps? I'll tell you right now. I'm going to give you a sneak preview of the book. You're not going to get this anywhere else. Look, you're buying Intel, you're buying Microsoft, Google, Apple, whatever. These companies, they have a deep management leadership infrastructure, okay? Apple. Tim Cook, the guy got hit by a bus, the company will be fine. Might even do better. I mean, they have massive management leadership talent, deep bench, okay? Look what happened with Steve Jobs. Everybody thought, hey, this is Steve Jobs. As soon as he's dead, the company's going to go in the toilet. I thought so, by the way. But sure enough, you know what? The company has such a deep bench, so much talent that it doesn't matter who's running it. I mean, this guy, I don't know. I don't think too much of him, but I mean, he's probably a good manager or whatever. He's not a very charismatic or anything, but But when it comes to penny stocks, the CEO is the number one thing. It makes or breaks the stock. It makes or breaks the stock. And that's because, these microcap companies, they don't have a deep management bench. Any of these companies that we're looking at, any one of them, right? You have a very small team. I mean, NexTech is a small team. What is it? Visibility Group, VSBY, which is in the news. I'm going to talk about that one in a second. Small. All these companies have small teams, right? And the CEO has an outsized impact. So, if you have a guy who really is a winner, who's got the right mentality, and by the way, in my book, I talk exactly what it takes, the right mentality for these CEOs, because look, some of these guys are total losers, and you can tell right away, and some of them are absolute winners. The number one thing when it comes to stocks is the job of a public company CEO. Make the stock go up. That is the number one job, okay? Make the stock go up. That's what they're hired for. I mean, even big companies. Why does a CEO get hired or fired? Why did they fire that Yahoo? How many Yahoo CEOs got fired? I mean, like, how many did they go through? I think they went to a couple of them, right? I mean, the Marissa, she was supposed to be the, superwoman. She got paid $100 million, right? What did she do? She was a complete disaster. But why was she fired? Because was she a bad manager? I don't know, but she was fired by the board because she couldn't get the stock price up. That's why these companies, that's why they replace CEOs, right? In the microcap world, we don't talk about it that way. We don't talk about max. I'll be very direct. The CEO's job is to make the stock go up. Some of these guys, they don't get it. But the other thing is this, right? It's a very difficult job in the microcap world because you got two jobs. You got to run a business. You really got to execute, or you got to have people who execute. You got to manage a team. You got to be a leader. At the same time, you got to do the main job, which is make the stock go up. And a lot of these guys, they don't really have experience. A lot of these guys are very wet behind the ears. They just don't have the fucking experience. It's what it comes down to. They're entrepreneurial people. Some of them could be very good people, but they don't understand how capital markets work. They've never really before they started running the company, they didn't have experience with stocks, really. I mean, they may have bought a stock, but they don't know what it takes to move a stock, right? So, and if you look at all the stocks that we've had, which were disappointing, where, they were kind of duds or let investors down, it was always because great story, a lot of catalyst, inflection point, everything, right? It was the CEO. The CEO basically did not have what it took to go over that finish line. They just didn't know how to win. They didn't have that winner mentality. They didn't have a champion mentality. They might have been a winner. They might have gotten to a 5X or 10, but they weren't a champion. These guys, might be a one and done, whatever, hopefully not with some of them. But look, I'll give you an example. Look, case studies, Skylight Health, Prad, right? And I keep bagging on the stock. I own the stock. I'm kind of stuck with it, and I want it to go up, right? So it's like, look, I love the story is great, right? Here's what's tragic about this. Like this guy Prad, super charismatic guy. Like this guy, if he had any brains, if he would listen to what people are telling him, like what I told him, what other people advisors have told him, this would have been a $10 stock, right? You got Sean Black, who was in it. I don't know if he's still in it, but you got a lot of smart people like it. Prad, could have been a superstar. That guy has everything it takes to be a superstar, except, he might be, maybe he thinks he's too smart for his own good. I don't know. He dropped the ball. As soon as he got onto NASDAQ, he thought, I'm a superhero. I'm a whatever. I'm a super. I don't need promotion anymore. I don't need to talk to retail investors. He got very arrogant. And where's the stock now? The stock was $5. Now it's 50 cents. All right. The guy could have been a winner. It's tragic. How about, give you another one. How about, trying to think who else. How about CBDT? Another one, right? Like CBDT, that stock went to 250. And, it should have stabilized it could, look, with the right leadership, CBDT, I think could have stabilized at $1.50, right? The problem is, and again, look, I think Steve is a great guy, but he's never had experience running a company before. He didn't really know how to promote stocks or deal with how to raise capital. When did they do the capital raise? I mean, they could have raised $50 million at $1.50. They could have done it, right? At $1 even. They raised like I think like $1 million at 20 cents recently. Now the stock is 10 cents. 10 cents. How about Visibility Group, which I'm going to talk about later. I've done a whole video on that. I'm not happy about what they're doing, but look, company with a great story. Problem is the CEO doesn't understand like the stock promotion business or apparently capital raising, because they could have raised money at $2. They could have raised money at $1.50, right? Why are they raising at a private placement at 30 cents in the middle of the summer? Who does that? Who raises money the week of July 4th? In America, it's a holiday. Anybody who's like, I don't know, in Germany or whatever watching. Who the hell does that? I mean, only an idiot would do that, or a desperado. So I think, look, I would say this is something which could be a case of securities fraud. I'm not saying by who. It could be multiple parties. All right. You have the investment bankers at Echelon Group. Were they involved with manipulating the stock? Okay, I'm straight out manipulating the stock down, shorting the stock down to where it got to 30 cents. Was it maybe the fact that Jay stopped promoting the stock since January, letting it drop? And the only time and again, the company was stopped doing anything. And the only reason why they started putting out news like in April, like all of a sudden you saw week after week of news, was because I was putting out tweets saying the guy's a moron, and I was emailing him. I wrote him a very long letter. Maybe I could share it with people, saying, hey, this is what you got to do. You got to start putting out news, right? I don't care who you do with. You don't do it with me. You could do it with, Penny Queen. You could do it with Greasy George. You could do it with, whatever, Mr. Rogers' Neighborhood. I don't care who you do it with, right? Just, you got to be promoting the stock. That's your job. Sure enough, he starts putting out news. And then all of a sudden, because the guy doesn't know, he doesn't know what he's doing, basically, right? So that's why they did this stupid private placement at 30 cents. They could have raised money at $1.50. So either fraud by the investment banker, some sort of collusion, maybe with bank insiders, maybe some other people, that they wanted to force the stock down so they can buy in cheap here with a warrant, by the way, with a warrant. Not only is the stock discounted, but with a warrant. I mean, this is the deal that is just fucked up. I mean, this is like outrageous. Contrast that. Those are, by the way, bad examples. Those are losers, right? I'm giving you people who could have been superstars. I hope VSBY works out. I actually hope, because again, that's a stock I own. I think it could be a great story. I mean, I think, look, if you had a better CEO, if you had, let's say, I use an example, Bruce Linton. Bruce Linton. We had a video. Yeah, that guy running it, that stock would be a $5 stock today. I mean, I think Jay should just hand over the reins to Bruce Linton. Just stand back. I don't give a shit. Let Bruce Linton run the show. Give it, or ESC, another example. ESC Entertainment. This guy, I mean, that stock, we introduced it at 30 cents. It went to $4.50, I believe, 15-bagger. And, Conrad, talks big game, acquisitions, roll up. All of a sudden, he gets right to where, so close to the finish line, like to the goalpost. I mean, this, and he drops the ball. The stock now, it's like, I don't know, what is it, 50 cents? Volume is dried up. No volume. The U.S. volume is zero, basically, because they stopped promoting it, because the guy doesn't understand what it takes to win. I mean, how do you expect to do a roll-up of esports companies if your stock is in the toilet, right? That's so stupid. Anyway, contrast, bad examples, CEOs. I mean, I don't want to say bad, because look, I couldn't have run those companies. Absolutely not. I mean, I'm a horrible. Listen. I can't run a business. I mean, this is not my thing. I'm not into, having hundreds of employees. I've tried that. It's not for me, right? I'm not saying I could do a better job. Absolutely not. I mean, those guys could be better than me any day of the week, right? But the point is, you want to deal with winners, right? NextTech CEO is the complete opposite of all these guys. Evan Gappelberg, I've talked about before. I mean, again, if you've followed the history, Evan and I, we've had our ins and outs, in the past. But this guy is the absolute best, in my opinion, of all the any CEO probably under the billion market cap. So any micro cap CEO, why do I say that? Why do I say that? Why do I say this guy is so good? There's a couple of things. Because you got to understand the deep psychology when you're dealing with these people. You really got to know what's motivating them. Are they really losers? Like some of these guys are losers, right? Like they're afraid of winning. Some of these guys are actually afraid of success because, I don't know, God forbid the stock goes up 100x, maybe, I don't know, maybe their whole life would change. Maybe they're worried that, I don't know, they would leave their wife and run off with a 18-year-old hooker to Brazil, start doing drugs, and they would be able to, who knows I don't know who knows? People are so complicated, right? But the fact is a lot of people are afraid of success. On the other hand, you have people who are extremely, they have a psychopathic, manic focus to go absolutely to the top. They want to, make billions of dollars. They want to maximize their full potential. They have super competitive. That's Evan Gappelberg. This guy is, because I actually have met him a couple of times. It's funny, of the CEOs I've dealt with, I've only met a few in person. I've met Evan a bunch of times in person when I was living in Florida. First of all, the guy is a super driven, super competitive guy, okay? He is not going to be happy unless this stock is at least $10 a share right now. I'm just telling you, this is it. He is a super, super motivated guy. How do you know this? How can you tell, right? Look at their news flow. Look at NextTech. This is not just me saying it. I'm not making this up. I'm not just, look at their news flow. Look at NextTech news flow for the last 3 years, especially for the last 2 years. Every week they have news. Every week, consistent news. They're doing the right thing. They're doing what investors want. It's transparency, getting people engaged. You see them talking at conferences. You see them talking. You're doing well. Always promoting the stock, driving the business forward. They've done acquisitions that move the stock. I mean, this guy knows how to create value. More or less, and more than that, he knows how to raise capital at the right time, right? Look, he took a lot of heat for doing a raise at back in January, right? Right when the market started collapsing, they did a raise. I think it was, what was the price? The price was it was like $2, basically $2. They did a raise right at that price with a hedge fund it was a screwed up deal. It was H.C. Wainwright was the banker, and the fund, I think they ran into some problems and they started liquidating a lot of their positions. They had something weird happened there, and basically, I think they're trying to keep the warrant. Who knows what these guys? I know that these guys made a lot of money before, so I don't think they really care. But anyway, the point is, those guys were just dumping the stock mercilessly for the last up until like, when is it? I think it was right here. Yeah, the bottom, June 10th, like a month ago, basically till last month. And all of a sudden, when they were out, you could see it's almost like you're holding a beach ball under the water in a pool. You're holding a beach ball under the water, and as soon as you're pushing it down, and then you move your hands away, and it poof, pops. That's what's going on with NextTech. So those guys, as soon as they're out of the way, the stock can finally breathe. But what am I telling you? Why am I telling you this? Because this is a guy who's been in the capital markets, almost 30 years. I mean, actually, ironically, I've talked about this before. Our paths crossed like 25 years ago. I was kind of doing work in the same brokerage for me that he was working at. I actually remember him. We never talked. I mean, I met it. I was there, but we never really had anything to do with each other. But then I remember that name because it was a weird name. Like, how many people have that Gapple? It's such a weird name, right? So it turns out this. So listen, this guy he's raised millions of dollars for companies. He's been involved with growth stocks his whole life, professional career, right? He knows exactly what it takes to move these stocks, right? And quite frankly, he really needs, it's not that he needs to have, I believe, again, I'm not a psychiatrist, but he's a super competitive guy, which is what you need. You want guys who are not, I don't want CEOs who are playing golf and hanging out with their family and, and I don't know, whatever it is, living a balanced life, fuck that. I want them 24/7 working on the stock, the business. I want them to make the shareholders rich. That's their job, right? You want these guys, working like a Jamaican, right? You want them 24/7 focused on moving the stock. That's what this guy is, because he needs to have this stock go to $10 because he's a competitive guy. He has friends who are very wealthy, right? I mean, he's a successful guy, but he knows guys who are like, in the 3 comma club. What is it? The 3 comma? Those guys who are billionaires, right? So, and he thinks he's better than them, right? Or he believes deep inside. So he needs to prove himself that he could have the stock be a $10, maybe even $100 stock. Maybe I'm going too into weird. It's like, but you do need to understand the motivations of these CEOs, right? This guy will not stop. He's relentless. Look at it. Look at the track record. Consistent, 2 years, 3. Relentless, right? There you go. Benjamin nails it 100%. Look at this. Look what happens. And here's how you tell. This is what separates the men from the boys, right? This is what separates the men from the boys. In a hot market, everybody's promoting their stock. When the market is hot, the sector is hot, everybody wants to, especially in Canada, because it's, the Canadian mindset, quite frankly, here's the crazy thing. Canada is basically, it's basically a giant fraud. I mean, it's kind of like, but in a professional legal way, they kind of, but the whole thing is basically, all the stocks, even though they're not like, it's basically the whole country is a giant pump and up, right? Everybody thinks the same way. Promotion. Oh, we only promote the stock when, the sector, it's a mindset, right? Because these guys are really, basically, a lot of these guys are, they're not really running a real business. A lot of these guys are, they're, I don't want to say pump and dump, but it's a legal pump and dump. I mean, they just want to promote the thing and do a little success and hopefully get out. That's 90% of the Canada, right? Those guys. Then you have the guys who are real. They're running a real business, right? So the Canadian mindset is, okay, when the market is down, we're not going to promote because nobody's buying. Whatever. There's some bullshit. It's complete bullshit, by the way. The champion mindset is relentless, straight ahead, attack. The market is down, we're going to be putting out news. The market is up, we're putting out news. Sector is up, putting out news. Sector is crashing, news. We're going to be promoting. We're doing conferences every day in, and here's what happens. When the market turns, these stocks are the first out of the gate and they go much higher. That's what's happening right now with NexTech. Why is NexTech out of the gate? Why is it breaking out of the 50-day moving average? It's paying off, right? And investors know this, because look at these guys who all of a sudden you heard from them they were in your face all day long. They're in your face. Oh, we're going to be a 100-bagger, $1 billion. We got a $100 million acquisition pipeline, 200 million M&A pipeline. We're going to be as soon as the market goes down, where are they? They're in hiding. Talking about Skylight. I'm talking about ESC Entertainment. I'm talking about all these. I think Evan is American. Just that's maybe the difference. I mean, it's a different mindset. So, but yeah. So a lot of these guys, they're just this is what separates them. And I think investors appreciate knowing that there's transparency, there is engagement. Okay. I mean, look, if you send an email to Evan, hey, why is the stock, blah, blah, whatever, you'll probably get an answer back. I mean, he might be a little busy, but you'll get an answer. On the live stream, he answers all the questions. The bottom line is this: what separates the men from the boys is bear markets. And it's separate. Listen, investors also, everybody makes money in a bull market, right? A lot of stocks go up in a bull market. But how many of them are, how many investors are still active? Like, look at this. Probably our audience right today, the number of people watching the live stream today is probably off by 50-60% what it was, in a year ago when the market was absolutely hot, right? Because there's a lot of these fly-by-night investors, they're in and out, Bitcoin, whatever, and they're on to the next thing. They got blown up, The guys who are in the market now are the guys who are going to make a lot of money, okay? The money is made now. This is the time to make money. You buy things when they're ugly. You got to buy ugly, sell pretty. By the way, I talk about that in my book also. You got to buy these stocks when the blood is running in the street, even if it's your own. By the way, I'm not making any buy-sell recommendation, but this is the time. This is the time that separates. It's like Warren Buffett says. When the tide goes out, you can see who was swimming naked, right? When the tide goes out, you see who the poseurs, the pretenders. This guy is a winner, NextTech. So here's what's going on, NextTech. I believe, number one, the CEO, absolutely relentless mindset. He wants this thing to be $10. I'm just telling you. I'm not saying, I'm not making any investment or recommendations. I'm not saying anything. I'm just telling you, the guy, psychologically, he needs this to be $10. Otherwise, he can't sleep, probably. And it's going to get there. By the way, this guy's working all the time. I mean, I can, how many CEOs do I have on my phone? He's the only guy on my phone, by the way. I talk to him on Sundays, weekends, whatever. Listen. I want guys focused on making the stock go up. A little while back, a guy calls me up, a CEO calls me up and says, "Hey, I want to hire you to do promotion." Blah blah blah. Okay, interesting. The stock is an interesting story. I would look at this guy's story. Stock was cheap. I had a couple things. Actually, the story was interesting. Little, had some hair on it, but whatever. Then he starts telling me about golf. I like to play golf, whatever, right? But I'm not running a public company. This guy tells me he's playing in tournaments. He was taking a lesson. It's like, fuck this. I don't want a CEO who's playing golf tournaments. I don't want to have a guy, he can play golf after the stock goes up 100x. Meanwhile, when it's, trading at a nickel or whatever, I want the guy working 24/7. I don't want him playing golf. Okay. That's 5 hours on a course. I don't want that. Sacrifice now when the stock is up 10x, 100x, buy your own goddamn golf course. Okay. Like the guy from GoDaddy, Parsons. I think Parsons bought a big golf course or something in Scottsdale. So motivation of CEO is very important. I'm going to talk about that in my book, the 100-Bagger book. Anyway, stock looks amazing. I think this is ready to move. You can see what's going on. Okay, I'm sorry. I got distracted. Let's go back to the moon stocks. Okay, TDOC. Here's another Cathie Woods stock, right? Breaking out of the 50-day moving average. Now this thing, honestly, okay, you got potentially looks like a double bottom. I don't love this chart because look at the steep angle, this drop. I don't love it. It's not coming out. It doesn't have a real base. I don't love TDOC, although technically it's above the moving average. It might close this gap. You might see a run to like $60. I don't love this stock. Okay. Let's look at Tesla. Actually, hold on a second before I do. Okay, so I talk about TDOC. Okay, let's go to Tesla. Actually, no, let's go to Palantir. Palantir, much better base. As you can see, the decline, is not an aggressive collapse like TDOC, like totally different chart. Like this is like just your normal decline. We're above the 50-day moving average. Again, not a lot of data on the chart, which I don't love. I want to see at least 18 months, 2 years worth of data because like you don't really have I can't see what's going on here. Like there's not enough data in the chart. We're above the 50. You got a flag kind of breakout happening. I think this thing has got a path to $15 and maybe beyond that. I own the stock, so I probably shouldn't have bought it because the risk reward is not that big. I don't think. I mean, it could go to, what is it going to go to $20? I mean, I want to have a bigger risk reward stuff. I want something which is like a 10-to-1. So this is like, this might be a mistake. Look at another one. Actually, okay. DraftKings. You got a kind of a double bottom happening. I talked about this one before. We're just below the 50-day moving average. It looks like we're about to break out. And you got kind of an inverse head and shoulders bottom happening here. I think the stock wants to go higher. I think this is one of those disruptive innovators ready to go. But let's go to Cathie Woods. Amazing. Cathie Woods. We're above the 50-day moving average. You got a inverse head and shoulders right now in the last month. A double bottom from March of 2020. That's it. Double bottom, March of 2020. I'll draw you the chart. I'll draw you a big fat trend line. There you go. There's your double bottom. We have a higher low than the last one. It looks pretty legit to me. I think we've bottomed out. I think we've bottomed out in Cathie Woods. I thought it was going to go lower, by the way. If you remember the live streams, I think I said it could go a little bit lower. What number? No, I think it was right around here. Yeah, right around this like $35 number. But yeah, we're above the moving average. And look what happens when this thing breaks out of the moving average. We've had some big runs, right? Some big runs from 50 to 150. We had a couple fake outs, but you know, I think we're good for a nice move. I think we got some resistance coming up in the 75 range, a little bit in the $100 range. It looks like every $25, yeah, like there's a bracket. So every $25, there's a little bit of resistance. That's what it looks like based on this chart. So I think we're pretty good till 75. You can see a move to 75 by October. Oh, I'm sorry. Yeah, you don't want to see me. You want to see the chart. So I think we could see a nice move in ARK. Yeah, so ARK break it above the 50-day moving average. Very bullish. Again, leading indicator. Excuse me. Forward looking. So I talk about Zoom, TDOC, Palantir, Tesla, Roblox, ARK, NexTech. Okay, let me give you a couple more penny stocks which are looking very good. Here is one in the fintech space. Ignore this trend line because it's actually from a different chart. This is XTM. It's a fintech company. You got an inverse head and shoulders bottom happening here and a breakout above the 50-day moving average. Let me pull up the American chart because this is really the thing to look at. So on Friday, we closed just slightly above it. So the American chart doesn't have as much. Yeah, it doesn't have as much. Let me go to the Canadian chart because it'll give you a better sense of the sentiment. There's not enough trading there on the American thing. Yeah. Okay, so we're going to break out above the moving average. Resistance levels. Next area of resistance right around 30 cents. Over here again, like actually I would say 35 cents. So we could see a run to 35 cents. Not a lot of resistance. Next level is probably in here at 45, 50 range. And again, this could be a double bottom. Not enough data on the chart, so I can't say where this is going because again, it's a very fresh chart. We got to see what happens, right? But we are above the moving average, which is important. Here's a stock that started moving on Thursday last week. AIML, we talked about it in there's a couple of CEO interviews out there that tells you what's going on. Very compelling fundamentals in the health tech space. And this could be helped by TDA, a couple of these other things moving out. You got to break it above the 50-day moving average. We got to see if it holds. That's going to be interesting to watch. Will it hold? Will it continue? Will the momentum continue on AIML? But right now, it's looking good. It's looking very good. Hey, this is 100% NexTech. Look at this. Corey, you're 100%. That's one of the things I talk about in the book. What are the qualities you need in a CEO? You need somebody who thinks on their feet and they can pivot. They can pivot. When the market changes, if something is not working, these guys go in a whole new direction. That's what happened. NexTech, they were doing the AR right before the pandemic started going. Right in the early, they bought a streaming, online event business, and that was the thing that moved the stock. I mean, that was like a sort of like a Zoom type of thing. Look, Airbnb, these guys were very smart guys, but they started off, I think, selling cereal or something online. That wasn't working, and they went to selling space, renting out their couch online. You know what? Countless stories like this. You need somebody that can pivot, and that shows you how the guy thinks. So that's why I'm so confident in the stock in NextTech, because here is a guy who's executed. He's actually executed in very rough market conditions. Stock became a 20 bagger basically. And now we're back. You got another bite at the apple. I think NextTech, I'm expecting, personally, I think NextTech is going to be one of our biggest winners next 12 months. Hopefully we'll have 100 baggers, but let's put it this way. I think we'll see some, nice moves. I can't, again, the Canadian regulations prevent me from telling you. I'm censored by Justin, what's his name? Bieber, Justin Trudeau. It's the nanny state of Canada doesn't allow people to say to make price to talk about price, if promotion wise, or they get very irritated, the regulators. So I don't want to irritate the Canadian regulators. We don't want to do that. I think NextTech is going to do very well. Look, when it comes to these things, I always tell you my philosophy: stocks always or have a very good chance of going back to their previous old highs and sometimes surpassing the old highs. It's just becomes part of the DNA. It's part of the psychology of a stock, which I also talk about in my book. That's why you got to read this book. It's going to be a massive bestseller, and at least 5 people will read it for sure. But it's going to teach you how to, make billions in penny stocks. So NextTech was $10. And again, I'm not saying it's going to $10, but I'm saying that, in my experience, stocks, like to go back to their old highs. I'm not making any price projections, but just stating a fact. We've seen it over and over. We saw that with CBDT. It exceeded the old high, right? CBDT, look at this CBDT. CBDT. Okay. Okay. So, I remember back in, 2020, whenever I was saying, hey, look at this is before this thing over here, before this big spike. But, right early on, when the stock was a nickel or 10 cents, I would say, hey, this stock, one time was 50 cents. I'm sorry, no, EPWC. That's the one look at, EPWCF. No, I'm sorry, CBD. Okay, whatever. Anyway, bottom line is, the stock, one of the things I said, hey, the stock was 50 cents before, and, trade at that number. I think we could trade there again. And sure enough, it happened. It exceeded it. So can we see the same thing happen with NextTech? I don't know. You decide, right? I mean, we know what's going on here. We know what's going on. No, we're not covering ESC. I am in the US. I live in the US. Come on, man. I wouldn't live in Canada. Yeah, so we'll see. I may even have to leave the U. Actually, look, the problem is, it's like no place is perfect, and America is as they say, it's the cleanest shirt in a pile of dirty laundry. Like every place has its problems, but it's the cleanest shirt in a pile of dirty laundry. So it's the least worst. Anyway, so we covered pretty much what's going on here. We got NextTech, I think, very nice setup here. We got AIMLF, a very good setup. Again, I want to leave you this chart. I just want to leave this chart for you. NEXCF, I'm going to show you the American chart. This one has the real volume. That's your breakout. There you go. Pennant formation, breakout, a little profit taking end of day. This is a 1-hour chart. I don't know, they call it a cup and handle, whatever you want to call it. Pennant, flag breakout, what difference does it make, right? This thing, look, it's such momentum, such strong momentum. This thing just wants to rip higher. And I think once this thing, let's say, look, this thing looks like it has a easy path to $1. I'm not saying it's going to $1. I'm just saying support resistance, line of least resistance is towards this $1, because that's where you have resistance on the American chart. You're going to have resistance in this like $1.10 range. but between 62 cents and $1, there's a bit of a vacuum. There's a vacuum. Vacuums like to be filled. So, yeah. Anyway, that's what's going on. If you're watching this live stream, I think I'm done. I think I've covered everything. So thank you for watching. Make sure you press the like, subscribe button. Tell your idiot friends. And I'll see you all on the next live stream. I don't know this, but if you do know him, have him get in touch with me. Whatever. Okay, guys. Thank you. See you. I think this week we're gonna have a couple of live streams. I think we got AIML. I think we may have AIML, a couple of others. It's the summer. A lot of these guys like to relax a little bit. Not NexTech though. Not NexTech. All right. See you all soon.